All right, everybody, welcome back. Kyle Bazzi here, president of Benzinga.com. Got a good one coming up next. Motif investing here for the Benzinga Fintech Awards, where we're looking for the most innovative products, people, and companies that help make you money. CEO and founder, Hardeep Walia. What's up, Hardeep?
Hey, Kyle. Thanks for having me.
You guys are, in a lot of ways, and this isn't self-proclaimed, this is coming from me, the golden child here of the fintech space with what you guys are doing. For people living under a rock, tell us what Motif Investing does, and how did you start this company and come up with the idea?
So the original idea was I wanted to invest in a very simple concept. It was the mobile internet. And I went and called some of my friends who worked at hedge funds. I said, hey, how do you invest in the mobile internet? They said, oh, it's easy, just buy Apple. This was 2009. Then I said, really, is that the way to play mobile internet? They said, yeah, absolutely. I then called up some of my VC buddies and said, how do you invest as a retail investor in the mobile internet? And they said, oh, buy Apple. And then I did a quick survey, and everyone kept saying buy Apple, but they weren't thinking about the cell phone towers, companies that do well, whether iOS or Android wins the handset war, the chip companies, the touchscreen companies. And when you try to build an actionable portfolio that actually gave you exposure to the mobile internet, there were 30 stocks in the first Motif we built. At $10 a trade at an online broker, it was really hard to justify $300 to go act on the mobile internet. And the big aha for us was people naturally think conceptually about investing, and they have trouble acting on their investor, and the impulse is always to buy a single stock, but it's hard to get single stocks right. So our view is we're kind of like Peter Lynch meets Jack Bogle. There are great ideas around you, really hard, so we create these indexes, these baskets of stocks around concepts, and the concept can be a hot new trend like drones, because I believe Amazon will figure it out one day. It can be a trading strategy. I don't have time to follow the markets, but I like buying on the dip when people panic sell. Or I want to be like my old professor, Dave Swenson, who runs Yale's endowment. I can take each of these expressions and turn them into a motif. And a motif, to be clear, is a thematically weighted basket of up to 30 stocks built around one of these concepts. You can buy them in a single click, 30 stocks for the cost of a single stock transaction. Our customers like to think of these as customizable, no-fee ETFs built around an idea they can get their hands around.
All right, there's so much there that I want to discuss. Before we get to that, though, you guys have been growing like wildfire. How long ago did you start? And give us some growth numbers and some metrics that'll wow us.
So we started 4 years ago. We were on the market. It took us 2 years to build, and there's a lot of reason it took us 2 years to build. There's a lot of technology behind the scenes Motif, and we're touching about 120,000 happy Motifers right now in the last 2 years, and that's just focused on our individual investor, our retail business. We will be announcing soon a lot of interesting stuff. We got into the advisor space, being a platform for financial advisors to manage a book of business. We launched that in the middle of last year, and that's also been a huge source of growth for us, and we're pretty excited to make some announcements soon about that business.
All right, and for everybody that, I don't think this is true of now, but of years past, that fintech wasn't a space that VCs or, really smart developers were interested in. How much money have you guys raised to kind of prove, what this space is kind of coming into fashion?
Yeah, we've raised $86 million to date, and we're lucky to count some pretty well-known VCs in Silicon Valley, but we've also got Goldman Sachs, JP Morgan as investors, and we've had a lot of luck with bringing some very, very well-known figures to help us think through the business, grow through the business. Arthur Levitt, former SEC chairman, is on our board. He's a personal mentor of mine, and so we've raised a lot of money. We've gotten a lot of attention, and there is a lot of money coming into the space, and there are a lot of companies that are very similar to each other. We think we stand apart as a pretty differentiated model.
All right, foundation set now. Let's dive into the experience. Explain to us, how do I get into a motif? Where do I make motifs? What is the platform itself?
So it is a very visual. We've been described as kind of a Pinterest of investing. It's a very visual product. You come in here, you can type in something like water into a search bar. It'll ask you water is in water shortage, water is in utility companies, fracking, huge consumer of water. And what you're doing is you can get into a motif, see what the underlying stocks are. You can change the customize. There are these nice little sliders So in our biotech motif, you can go long cancer, and soon you'll be able to even go negative and short infectious diseases. What you're buying, unlike a fund, is you're buying fractional shares in real time. And roughly at 30 stocks, it's 33 cents a ticker. You're buying that. But more importantly, it took our PhDs a year to build 120 of these motifs. It took our customers a year to build 75,000 motifs. So this is very much a social crowdsourceable model. There's some really smart folks in our community that come up with great ideas, things they see in their day-to-day life. You'll have doctors who are very good at invasive surgery, and they'll build a minimally invasive surgery motif because that's what they know really, really well. And that's what you're tapping into when you come to Motif. You've got an opportunity to work on and look at some of the motifs we built, but you've also got a huge universe of motifs that our customers built, and a lot of them have deep domain expertise in what they build. But no matter whether you buy one of our motifs or one of the community-built motifs, you can easily customize, tailor. You might want to buy a motif that tracks the S&P 500, but you work at Google, and you don't need more Google. So the ability to delete stocks, add stocks, we make it super easy to really tailor the motif to what it is that you want to do. So a lot of people like to think of a motif as a great starting point. There is a lot of science that we put behind how those 30 stocks get selected for your specific motif, because a lot of the motifs behind them are broader indexes. Our biotech motif has about 150 stocks in the index, and a motif is a sample of up to 30 stocks that track the risk-return behavior of the broader index. So if you're familiar with ETFs, that's how a lot of ETFs work as well. But this is not a fund. You're actually buying 0.75 shares of Apple when you buy, and that is one of the innovations that took us a long time to develop, real-time fractional share trading. You dollar invest, you can put as little as $300. You can put $100,000. It'll cost you $9.95. And that dollar invest was an obsession of ours. We want to make investing very intuitive. And a lot of people say, I want to put $5,000 to work. They don't want to do the math of rounding up whole shares. So we obsess with making things intuitive and making things easy.
All right, so there's two parts I want to touch on here on the innovation side. One is the idea execution. You know, Benzinga was built as the trading idea network for traders and investors. For them to go and execute those ideas is awesome. We'll talk about that. But get into the brokerage innovation, because like you just said, the fractional shares, if I wanted to execute an idea, I could buy a mutual fund, an ETF, or I could go buy all those stocks myself and get charged all the commissions. Why is it so important for the retail investor in terms of them saving money, making money, being able to execute faster? What have you seen?
So let's talk about the first one. Buying a fund, you have no idea. In a traditional mutual fund, you actually don't know what you own, right? And so there are many reasons. You've got to trust the manager. You get quarterly disclosures of what they held at one point. And more importantly, there are these big fees that compound. We all like to compound returns. Most people don't think about the compounding of costs. And when you've got longer-term trends, for example, those are things that are very important. So we have a huge advantage in that what you see is what you own. It is a very transparent model, and if you don't like what's in a mutual fund, right, even if you think you know what's in there, you can't do anything about it. So we have a huge advantage in that we are like an ETF. We give you the same sort of diversification. We give you the ability to tailor that motif, and we do it without ongoing management fees. When it comes to brokerage, you can take any of our motifs. We put them out there for a reason. You can't go buy them at a traditional online broker. A 30-stock motif at your favorite broker is going to cost you $300. To purchase. It costs us $9.95. You can't dollar invest. You can't say, I want to buy $1,000 of our mobile internet motif. You literally would have to go in and calculate whole shares, so it's very tedious. And most importantly, you won't get the plethora of ideas, the connection to our community, the ability. We are a social platform, and we say that pretty emphatically, because there are not many social sites out there. And what we mean by that is I can control what information I want to share with whom. So I've got a close investing circle, my family members, a couple of my board members. We can have very private, intimate conversations on our social platform. And then I've got a broader set of friends where I could be, I share different information. I might not necessarily want them to see everything I'm doing, but that ability to control what information I want to share. And we can do this it's not kind of a Facebook session. We have traders who love to tell everybody what they want. Think of it as more as path, very intimate conversations. And our customers tend to use these as very intimate platforms to discuss ideas. Traders love to brag. And we have some simple rules. If you want to share with people what you're doing, we try to encourage you to share everything, right? And everything being, here's my portfolio, here's my motifs, this is what I picked, and here are my returns. You can't do selective disclosure, and we have some basic principles around transparency and integrity that we like to keep throughout the system.
All right, put your mentoring hat on real quick. There's a ton of fintech companies either starting up, trying to start up, raising money, dealing with the whole brokerage side and compliance. How tough was it, and what advice would you have for people or companies starting up?
I tell this is an old joke, but when we got our letter from FINRA, it said they were putting us on what they call the new and novel list. And I was going around, high five everyone, and my compliance officer was shaking her head saying, you want to be old and boring in this industry if you want to move quickly. We've been pretty forthcoming working with the regulators. There are things that took, frankly, 18 months to get approved. So there's no question there is a tax to being in a regulated industry. A good chunk of my time is spent either directly dealing with regulatory issues or indirectly figuring out how to work around the regulations. And I think the advice I have is you really have two options. And most people go down the latter option. First option is work with your regulators. Right, explain what you're doing. It'll take them, if you're new and novel, very hard for them to put you in a bucket. So it will take time, and that does add cost to your business model. But the good news is your probability of getting shut down are lower if they know exactly what you're doing, because they'll stop you before you do it. The second way is you just put your head, execute, and ignore the regulators and hope you won't get caught. A lot of startups do that, and a lot of startups have gotten shut down. Given the importance of what we do, we've decided to take the former. And full disclosure, I am an advisor to FINRA, and I sit on a lot of committees, including helping them understand new technologies. But working with regulators is frankly would be my. You will gain some gray hairs. You get gray hairs as an entrepreneur, anyways. But it's worth it. It's just not worth the risk.
Awesome. All right, before we wrap up here, let's go to the trading idea side now and talk about why that innovation is so important. Just from a cost standpoint of, like you said, when you were in a previous life here, you wanted to invest into XYZ and couldn't, or an idea. Oil's big right now. Why is it so important to bring down to the retail level? Is that putting us on a better playing field, or what have you guys seen on the platform?
Yeah, so I think there's you read the media, everyone's talking about millennials. What do millennials want? And whether you're a millennial or an existing investor, people care. Our philosophy, we differ with a lot of companies in this space, is we want you to care about what you're invested in. And for most people, they sit around in baskets of ETFs and mutual funds. They have no idea what they're invested in. I tweeted a story the other day that talked about how some of the biggest fund companies were invested in cluster bombs. Now, if you're invested in cluster bombs, technically that's automatically a war crime, and most people would have no idea they're invested in war crimes. But this notion of I need to know, I do not want ignorance. I really want to know what I'm invested in. I want to engage in our portfolio, but it is hard. And it's really hard to know what you're invested in if you've got a fund layer that doesn't allow you to figure out what you're invested in. So our model is you can be very different. My wife and I are very different people. She grew up very, very left wing, probably the leftmost liberal wing. So she would have a heart attack if she was in shale oil and anything. But she wouldn't even know, right? And now she's very clear. She can tailor out. We can have the same asset model, right, and same risk model, but she can take out anything that's environmentally unfriendly. I, unfortunately, have a very different view. I think it's really critical, shale oil for our country. And I can invest knowing the things I care about. We can come to the same risk model, the same asset allocation model, but with us, you can really get a good handle of what you're invested in. So our model is we help investors make money. The average Motif last year generated 18% or so return. Obviously, there's a deviation around it. But more importantly, we help you save money. And we can take any strategy. I joke a lot, and we'll do this soon. You can give me your mutual fund. I'll give you a Motif minus the cost. And one of my favorite things to do, and you've seen me do this before, is I love to demo our Motif, some of our older Motifs versus Modern Warfare versus iShares Defense ETF. And one of the reasons we look so good over time is because we have no costs. And when you compound the costs over time and you're an index play, you automatically tend to do well because you've got a huge inherent advantage. So our philosophy is it's easy to invest on our platform. You really have a good sense of what you're invested in. You can clone whatever you like. If you really want to be a set it and forget it investor, we don't think there's any innovation there. So we have something called Horizon. It is completely free, and no one seems to believe me. I've been telling reporters for a long time. They're like, we don't believe it's free. And I'm like, I don't know what you want me to do. We charge no commissions. It's an asset allocation model. If you really want to get into the science, there are other companies that do this as their core function. We put it out there, and it's zero cost. We rebalance it for you, no commission fees, no management fees, and we put it out there because we think there is a need to get people into investing. But we think we have a better way of investing, and we think it makes you money, we think it saves you money, and more importantly, we want people to be engaged in what they're invested in, and we really care about what people invest in, and we want you to care. We don't want you to outsource your brain and say, I don't need to know, let me just go trust a bunch of models to go do this. We really want you to get involved in investing.
All right, we usually end with a 30-second wrap-up, but I kind of feel like that was it right there, so I'll ask you this. Who has the better returns, you or your wife?
Oh dear, probably me. But I'm far more active.
I'm sending this to her, so
probably me. But we don't discuss politics, and we certainly don't discuss investing because our beliefs are very intertwined with how we invest.
All right, Hardeep, Walia, Motif Investing. Thank you so much for joining, man. Glad you guys are a part of the award ceremony.
Thanks, Kyle. Thanks for having me.
All right, everybody. Until next time, this is Kyle Bazzi, president here at Benzinga.com. Go to Benzinga Fintech Awards. Check out what Motif is doing. Vote from them there, and also see over 110 other companies that are looking to innovate the entire space to help you create wealth, whether that's different products, the people that are there, and their companies. Until next time, we'll see you around.